Rome didn't build an empire on courage alone. It built it on debt. We love to imagine the Roman legions as unstoppable warriors, fueled by honor and discipline. But behind every polished helmet and sharpened gladius was a supply chain of staggering complexity and cost. Thousands of men needed food, weapons, roads, and pay. All of it required money, a lot of it. So how did Rome finance centuries of conquest? And why does it still matter today? Because the deeper you look into the Roman war machine, the clearer a pattern emerges. War wasn't just fought on the battlefield. It was baked into the financial system itself. And once that system was in motion, it couldn't stop. Expansion wasn't a choice. It was an economic necessity. Sound familiar? Let's go back. In the early Republic, Rome's military was a citizen army. If you owned land, you could be drafted. Soldiers brought their own gear and expected to return to their farms after a short campaign. But as Rome expanded, wars became longer and further from home. The old model broke down. You couldn't just grab a spear and head off for a year anymore. You needed professional soldiers. That's when Rome began to centralize military financing. The state started paying stipends to its soldiers. Not much, but enough to keep them loyal. Then came the real pivot. Conquest itself became the revenue model. Every new province meant new taxes, new slaves, new gold mines, and new tribute. It was a self-reinforcing loop. War funded, more war. But here's where it gets interesting and dangerous. Rome didn't just rely on taxation, it relied heavily on borrowing. During long, expensive conflicts like the Punic Wars, the Republic took massive public loans from the wealthy elite. These weren't patriotic donations, they were investments, and those investors expected returns in the form of interest, tax farming rights, and business monopolies in newly conquered territories. So war became a business, and the more profitable it was, the more wars Rome started. Over time, this militarized economy reshaped everything. Political power tilted toward generals who could promise spoils. Senators became shareholders in violence. Private contractors managed everything from logistics to tax collection, skimming fortunes off the top. It was military-industrial capitalism in a toga. And the costs, they piled up. To pay soldiers and creditors, the state had to constantly find new revenue. When conquests slowed, Rome resorted to the oldest trick in the book, debasing the currency. Starting under Emperor Nero, the silver content in the denarius was quietly reduced. Over the next 2 centuries, emperors kept diluting it, turning what was once a reliable silver coin into a thin promise backed by nothing. Inflation followed, confidence eroded. Meanwhile, the rich got richer. Senators shielded their wealth in land and foreign accounts, while the poor paid taxes in debased currency. The financial burden of endless wars fell squarely on the lower classes. This wasn't just a military collapse, it was a monetary one. Now pause and look around today. Governments running massive deficits. Wars funded through borrowing. Central banks quietly debasing currency to cover the shortfall. An economy where expansion, military, monetary, or market-based, is the only way to keep the system afloat. The DNA is disturbingly familiar. What Rome teaches us is that an economy built on expansion eventually hits a wall. You run out of lands to conquer or resources to extract. When that happens, the system turns inward. The debt remains, but the revenue dries up. That's when the state starts squeezing its own people. Rome turned to heavier taxation, more currency debasement, and more control. Bread and circuses to keep the masses quiet while the elite fortified their villas. Today we don't call it tribute. We call it taxation, quantitative easing, or monetary policy, but the mechanics are eerily similar. Central banks print money, governments spend more than they earn, the rich buy assets, the poor buy groceries with shrinking paychecks. Wars are still financed through borrowing. The US spent over $2 trillion on the war in Afghanistan, most of it funded by debt. Who gets the contracts? Who earns the interest? Who foots the bill through inflation? You already know the answer. Financial education isn't just about budgets and investing. It's about understanding power, understanding systems, and seeing through the illusion of stability. So next time you hear about a new conflict, a new stimulus, or a new crisis, Don't just watch. Follow the money. Ask who lends, who earns, and who pays in the end. Because if history teaches us anything, it's this. Empires don't fall when the enemy breaches the gate. They fall when the math stops working, and no one dares to fix it. If this gave you a new perspective, hit subscribe. History has the answers. I'll show you where to look.